big sectors. But let's do an overview of what trading has looked like over the week. And my colleague, market editor, is with me. Effiong Ekop is live in the studio. Effiong, it's good to have you in.
Thank you.
It's been that same flip-flop that we've seen. But in your thoughts, what really has played out and what stocks are you looking at this time?
Let me talk a little about the week. The week has largely been negative. Only yesterday, Thursday, that we saw institutional investors in a large number returning to the market, and they were picking stocks from basically the big banks. Talk of GT, Zenith, UBA. And one had thought that that trend would flip to this day, only to see that we are closing market in the territory in the red. It's been like that. So basically, you see that they have the character of taking funds out of the market. In other words, they stay largely on the sales window, selling their stocks, even before the dividend that some of the companies are announcing. It's like majority of the shareholders don't even bother about dividend again. They go for price appreciation, whatever they see on their stock, and then they sell and move out. That has been the trend. Sells, sells, sells. Then we see the volume traded coming down. Like today, only about 344 million units of shares compared to over 600 million of yesterday when institutional investors return. So I guess the coming weeks we will still see lean activities on the exchange.
I'm looking at some particular stocks that are driving. You still, of course, I see your list there, and I see the banks are doing pretty well and coming out with beautiful figures. Despite as we move towards the recapitalization process, I think most of the banks believe that they will scale through this.
It is their season. The banks are doing everything to put themselves in the eyes of fund managers and investors. You know, I also believe that those who want to play the markets, they are in for a battle with the banks. You know, thinking about what they had when they did the 2005 incidents of recapitalization, something like this. So they do not want a repeat of that case of burning your finger by believing all the assets of the banks, they are so big, they are this, they are that. They want to do detailed study. That's why some of them take the action of selling even before this. We've seen many of the banks trying to woo shareholders, calling meetings and meeting them and say, you better be prepared to buy up to them.
Yeah, of course.
So that will be, luckily they have about 2 years from now to be able to a long time. And some other people are thinking that most of the funds that they will get will come offshore. That back here, inflation and so many of the trouble may not leave so much into the hands of their shareholders to give them up. Let's see what it turns out to be. The major problem, as far as I'm concerned, is the larger economy. What does it leave, the shareholder with? See many of the companies that are coming, they are basically giving them dividend, not just what they expected. So will you always be going outside the market to the other level of investment to be bringing money to, save a particular company that you are interested in? That's the more reason that we have. And if you leave the banks, the manufacturers, we have seen many of them complaining, the normal complaint that we know. And so the economy is basically the problem. So long as the economy is weak, then the purchasing power, as the other guests have said, remains weak. Then investable funds too will be lean. I think that if they have opportunity to look offshore, maybe like Nigerians that are working overseas companies, and then those in London, well, maybe they'd be able to help them up. Let's see how it goes.
Amos, thank you so much. Effiong Ekop, do enjoy your weekend.
Thank you, Tolu. The same thing.
All right.